All right, so I'm gonna go over some stuff today that I think you're gonna like. All right. So the first thing is how do you connect the time frames to make the setups highly probable so that they actually work at least most of the time. First thing is, you might have seen higher time frame, medium time frame, and lower time frame. But how do you connect them? How do they make them work together? This is a key question that needs to be answered in trading. Otherwise, you get into the wrong situation, meaning what looks like it's going to work doesn't work and things like that. All right. So the higher time frame, what you're told is that the only thing that matters here is the trend, and this is incorrect. All right. This is incorrect. So we'll just take the example of a daily chart. So yeah, trend is important, but there's a key distinction that is usually not made. And I'll give an example of a daily, let's say you have a daily chart and you have a trend. And then you have some approach, maybe a short-term and a long-term moving average. This is your short-term moving average, and this is your long-term moving average. So it looks like an uptrend. Now the problem with this approach is that you could actually lose a lot of money, because if you're just looking at the trend in isolation, you're not taking a look at the leg, meaning the rotation. So what causes intraday movements to go up or down is a daily chart. The daily is impacting the intraday. And specifically, it's the daily rotation. This is even more fundamental than trend because it's a building block of trend. And it's the rotation. Are you an up rotation or a down rotation? Which rotation are you in? That, for day trading especially, is more important to impacting price movement intraday than trend. In fact, if your trend is up but your rotation is down, you're going to lose money. All right. So it's the rotation first and foremost. It's the daily rotation first and foremost that is important. Yes, obviously I'm saying trend is important. The other thing is relative strength. If you're in a very strong market, these three things: trend, relative strength, and rotation. Trend, relative strength, and rotation, very important. They directly impact the probability of two things: one, the trade working, and B, getting a big move. Right? But the most fundamental thing is the daily rotation. Are you in up rotation or down rotation? That's what really matters. All right? So the first thing you want to get right is the daily rotation. On a daily chart is the current rotation. And it's very simple to do. The way you do it, and I'll go into the how, is just taking a look at the zigzag. You put a zigzag indicator, zigzag or swing line or whatever they call it. That indicator will show you whether it's a daily up leg or down leg. You've got to get that right. All right. So we call daily the higher time frame, the long or short time frame, meaning it answers the question of, do I go long or do I look for short? All right. So the daily time frame answers the question of, do I go long or do I go short? And that is dependent on the rotation. Again, the question is, Should I go long or should I go short? How do I answer that? I take a look at the daily chart and the rotation on the daily chart. Is the rotation going up or the rotation going down? All right. So that's the first question of do I long or short being answered, and tactically that is done by the daily rotation being an up leg movement or down leg movement. And we're done with that. So that answers the first point. The second point now, I'll go into the second point. The second point is that this is your setup time frame. The high time frame was long or short. The medium time frame is do you have a setup? Now, the way it connects to the higher time frame is like this. First, let me write that this is the setup. And if the higher time frame, for example, is the daily, the medium time frame would be the hourly. Obviously, you can change this around to, tick-based periodicities, right? Stuff like that, like 4,000 tick or 5,000 tick or whatever, right? But on a time periodicity, the high time frame is typically the daily, and the medium time frame is the hourly. And the medium time frame is used to identify the setup. All right. Now, what is the setup that you can pick? There are many of them. The basic setup is a pullback setup. You'll have something like this. This is your rally. This is your ABC spring. It could be like that. It could also, there's plenty of setup. It could be a rally and then a retracement to, a certain level, bang, and then it goes. It could be like this, spring. It could be some type of coil, whatever. But this is a basic setup time frame, and where you look for setups. You could also just be buying breaks. It doesn't really matter, but you need to know what you're doing in terms of your setup and be an expert at the setup. Not enough to just watch YouTube videos. You really need to know it inside out, how it behaves, etc. All right. So again, recapping now, the high time frame is daily, and the daily answers the question: do I go long or short? And we do that by looking at whether the market is in an up or down rotation. Next step is to go to the medium time frame, which would be your hourly chart, and looking for a setup. Now, why do I say this? How do you connect the two? Well, the answer to this question is because when you have a daily rotation, right? Let's say moving up. When you have this on the hourly, this rotation looks like this. So this leg is this. So now you're connecting the daily time frame to the hourly movement within that time frame, zooming in, and what you'll see are the setups, the daily rotation, hourly setups. So when you see the hourly setup, you'll see that this here is a spring. You'll see that this here is a spring. This here may or may not be a spring, but similar to it, you get movements. You'll also see that above these highs you have the breakouts and breakouts here of these highs. And these breakouts, they become rallies. Breakout to, when a breakout has followed through, it becomes your rally, 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 rally. So when you examine the daily by going to the hourly, you'll see that you have up moves. You know, you have this big rotation what has rotations that are in it, and those rotations have a low and a high, and that are broken by breakout, have fall through by rally, pull back, and many times have springs. All throughout, springs and tests, etc. So this is the movement of the market. All right, you have the basic components, and that's if you put a wave chart on the hourly movements, you will see that what you have are rallies which are just impulse moves. You have breakouts that become rallies when they have follow through. You have support and resistance points, which are your highs and lows on that wave chart. And you have springs and up thrusts, and you have tests and retests. That's how it moves. These are the key behaviors. You have support and resistance, which is then broken by breakout, which has followed through, becomes a rally. And then after that, you get a pullback, and that pullback has a tendency to test the breakout. And sometimes it springs if there's a second pullback leg or more. And sometimes it gets tested and retested, and then the next breakout happens and the entire cycle continues. These are your key behaviors. All right. So now we're going to take a look at an actual example of all of this so you understand what I'm doing. Well, the first thing is we take a look at a leg, a rotation, and we see that on the daily chart we have this up leg from 6525 and right now at 6905. So 6525 to 6905 we have this up leg. So it turned, and then it looks clean. It looks, just going up. You see the zigzag on it, right? This is the zig. This is the beginning, and this is where we are now. So it's an up leg. Now, how does the up leg move, and how do we find opportunities? Well, the first thing to understand is that since it's an up leg, the rotation is up. If the prior leg is a down leg, the rotation is down. So you have up and down, up and down. So we're in an up leg. So now when we take a look at the medium time frame, we are looking for setups. The first obvious setup from a spring perspective, once we're in this movement, this daily up leg movement, is your springs. So you'll see the springing action here and here. You'll see it again around here and here. You'll see it again. multiple times here. You see it again here. So we have, once it's in an up rotation, spring, 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 right? Now, when it's a very little thing like this, I know that that's not good enough of a spring. I need something that's like that or that, you know, something that very clearly shows me that we have a spring. All right. So this leg, this daily leg, is this thing here, which all these price movements. So you just have to look for the setup, and it doesn't mean just take a setup, right? We have, am I going to go long or short? Yes. Then what? And I want to see my setup. What's your setup? If it's a spring, look for a spring. If it's a breakout, look for a breakout. If it's, I don't know, some POC, okay, do that, right? But the point is, I'm going long because I know the bias is long. I know the bias is long. Why? The daily controls everything else, right? So now the final piece of the puzzle is the lower time frame. So what you do once you see once you see the setup is you have to evaluate it. All right? How do you evaluate it? Well, first of all, you need to understand that you have to understand your setup in detail. All right? It's not a medium time frame setup, whatever it is. If it's a long, you should have strong buying activity. If it's short, you should have strong selling activity. So I'm going to look to see, okay, is this a spring? And then do we have strong buying activity? So we'll just take a look at each one of these. So the last one was right there. So first I have to pick the right market. So this was the last spring we had. Does this look like buying activity? Obviously look like buying activity, right? So the demand came in. So I have stuff that takes a look at different time frames, so I automatically know. Yeah, it's a spring buying activity. Now we go to the next one here. Look at this. Spring buying activity. This spring, it didn't work. And why? Because it didn't meet the thresholds. But this spring had the biggest volume in 35 and the biggest price in, I think, 48 waves. So this is a lot of volume, biggest in 35 and biggest up wave in 48. So the springs that looks like crap, I'm not taking. The ones that have very strong signatures. And how do you know? You look at the price volume, this is biggest in 48 and the most volume in 35. Next one is here. Oh, this is the one. All right. So this one has the biggest in 41. Right? So what I'm doing here is when price is in a spring position on the medium time frame, I want to see what the lower time frame is showing. Specifically, is it showing strong demand? And how am I quantifying that? Just the waves and seeing the strength of the wave in terms of price and volume. This one, if you go into spring position and you have the biggest wave in 41 waves and the biggest volume in 28 up waves, do you think that's weak? Obviously not. So bang, right there. This will work. This will work. Again, you go into spring position, biggest volume in 19 waves, biggest price up wave in 28 waves. So what happens? You pull back and test and pop. And once again, goes into spring position, This is biggest in 20 something waves with 49 waves. And then after that, you have this, which is where I catch the demand, having the biggest up wave in 31 waves. So in spring position and bang. Now we go to next spring over here. I don't know where it is. This is it. This is the demand. This is spring. So it came in here, but didn't give me a good pullback. How do I know? Look at price volume signature. Biggest in 24 waves and biggest volume in 15 up waves. Biggest in 24 waves with the biggest volume in 15 waves. So I'm going to add some indicators on this just to show that the movement is rallies and springs and rallies and pullbacks. So now again, I added a rally indicator. The idea is that we are in an up movement on the daily. How does it move on the hourly after, how will it look on the hourly? If we're in an up move, up rotation on the daily, how will it look on the hourly? It's rally, pullback, rally, pullback, rally, pullback. And some of those pullback will have a certain characteristics where there will be springs. All right. So again, a rotation up on the daily will have the look of a rally, pullback, rally, pullback, rally, pullback on the hourly, and some of those pullbacks will be springs, which is type of pullback. So you can see this up move, up rotation, and guess what? We got our rallies. Actually, we got the initial demand here. This is where I knew it was going to go up. How did I know it was the biggest volume in 49 up waves? So that's it. Game over for the bears. That's another story. All right. Let's go here. We're in an up rotation. And I see a rally. This tells me buy the pullback. What pullback? A spring. So one of these springs, and the springs will typically be springs of the breakout bar. Spring of a breakout. Where's the breakout? Is this that big bar right here? See that big bar, big green bar of crack? Crack, follow through. That breakout gets tested by spring. You have another rally. This is the breakout. This is the breakout, right? Look what happens. It gets tested. This is not that clear, but it gets tested too. This break here that does get tested by spring. This break gets tested, but it goes deeper and resprings. And the same thing's going to happen again until it eventually fails. All right. Now, put it all together is daily up rotation, medium time frame hourly, rally, pullback, spring, rally, pullback, spring. And on those springs, you have heavy buying activity, as I've just shown you. Bang. And you can measure the strength and weakness of what's going on those springs using waves. Those waves are then quantified based on their size and how big they are relative to other waves. So one approach is to see this is the biggest in 30 waves or 25 waves, or the most volume in 25 waves, or 40 waves, or something like that. This, for example, is the biggest in 31 waves. So obviously, this is strength. Strength, pop, go. 41 waves, pop, go. Respring, buying activity comes back in. Test, go. right here. So that's all, folks. That's really how you put the higher time frame, medium time frame, and lower time frames together, connecting the rotation on the daily with the setup, for example, a spring setup on the hourly, and seeing that the daily rotation, the way it looks on the hourly is just rally, pullback, rally, pullback, rally, pullback, and some of those pullbacks will have a spring. And on that spring, you see what the strength of the buying and the selling by going to a lower time frame, such as a 3-minute, and seeing if there's demand. And how you judge that demand is by quantifying how strong the price and volume waves are. And if they're strong, then someone's buying the spring. And that would validate the spring. Take care. Bye.